Hey y'all, what's it? Felipe. I want to kind of go into something that's like kind of got my attention recently, at least economically, because at the end of the day, it's going to hurt people's wallets or benefit their wallet, right? So this is interesting to me. So essentially, the United States is intervening into the decline of the Japanese yen currency. The yen has for some time really lost a lot of value. I think up to recent, it was 160 yen to a one US dollar, which is crazy. And these kinds of things are interesting. So essentially, Trump wants to keep the easy money machine, although the Federal Reserve has been keeping interest rates, uh, you know, in a tight range. For example, not either raising or dropping, or they've been saying that they're going to possibly increase interest rates depending on how inflation is going. But yet, on the other side of things, it's essentially a money printing machine. So how can you have those things going on at the same time? It makes no sense. So this is either going to be extremely inflationary, which if it is good for the stock market, or at some point it's all just going to blow up and it's going to be deflationary. But from what I'm seeing now, it seems like it's most likely to be inflationary, which at the end of the day is just going to increase the cost of everything, services, products, etc. So, like I was saying, essentially, the Treasury Secretary Scott Benson has been intervening in the decline, essentially rescuing the Japanese yen. So this article kind of like points out it in detail. So I'll just kind of read it. So, but this is a less of a rescue of the yen than an attempt by Scott Bessent, the U.S. Treasury Secretary, to preserve a cash spigot that benefits the U.S. Japan's ultra cheap money has become a global funding utility. Bankers borrow yen, sell them for dollars, and buy higher returning US assets, notably tax shares. So you can kind of see where I'm going with this. Essentially, it's tied to the technology market in the United States. Rising American stock market supports collateral and investments. Japan's carry trade is one of the reasons Wall Street can lever hundreds of billions into AI. Because as of where it stands now, AI is not profitable. And then I'll kind of share what I mean by that, because it's a lot of circular financing, which is some sketchy stuff going on. So Tokyo's monetary choices had bound U.S. markets to the yen trade. Rising oil prices driven by U.S. Iran tensions stoked Japan's inflation and weakened the yen. So the whole increasing prices of oil is really affecting inflation in Japan, which has led to essentially the Bank of Japan, which is their central bank, who controls their monetary policy, to increase their interest rates, which would be bad for the United States stock market. In other words, Japan has had to sell U.S. Treasury reserves, and in doing so, that makes interest rates rise in the United States um, in order to essentially protect their currency, the yen. Tokyo might respond with aggressive rate rises. This would be unlikely, as it would choke off the investment cycle that Japan is trying to create. It also creates a chaotic market unwinds. Higher rates shrink the gap between investors' returns and yen borrowing. A stronger yen also makes yen-denominated debt costlier to repay. Investors then sell U.S. assets to buy the yen needed to close their positions. That strengthens the yen further, inflicting bigger losses and forcing more U.S. asset sales. A currency correction could quickly become a Wall Street rout. Mr. Bensent has allowed Japan to borrow dollars against its treasuries. That's crazy. They're essentially allowing Japan to borrow dollars against U.S. Treasuries that they already own. So it's essentially free money. It's like the money printer is not hasn't stopped. That's very interesting. He has used a Federal Reserve lending facility to help. That's essentially what the Federal Reserve does with banks when they're in trouble. It's kind of interesting that they're doing that all to just essentially keep the U.S. tech market afloat in a non-organic way because it's government intervention, right? And once its current $60 billion daily limits substantially increased, this would give Tokyo room to stabilize the yen without having to choose between abandoning its reflationary program and selling treasuries. So ultimately, the motive here for the United States is to prevent Japan from selling U.S. Treasury reserves, because Japan would have to do that to essentially protect their currency. And if that were to occur, that would dramatically affect the U.S. tech market overall in terms of a possible, economic recession in one aspect of things, because there's many different things going on. So this is super interesting, and this is kind of what I was going into, that AI is great technology, but it's not profitable yet overall. Similar to how when the internet first came to be during the dot-com era, AI is kind of in that state, right? Yes, a lot of these big companies do make money, but they're not necessarily making money from the AI. So you can kind of see here that this shares like the circular financing going on in the AI sector, right? And NVIDIA is pretty much in the center because NVIDIA provides majority of the hardware that's used not only to train these models, but to run them, right? The data centers and all this kind of stuff. So this is not necessarily organic. It's just big companies passing around the same money in between one another. This is some crazy stuff. As you can see here, there's a lot of money going in between these companies and circling around. So it's not organic. It's not actual consumer demand. It's more just these companies passing around each other the same buck. That's kind of a crazy situation overall. But anyways, this is something that's been standing out to me and is super interesting. How it might affect the market overall, it could possibly just continue this inflationary trends, which ultimately is good for the stock market. But at the end of the day, I really don't know. It could eventually lead to like a massive deflationary situation if there isn't that actual true organic demand for this technology, which of course I feel like there will be at some point in the future. However, in the near term, I don't know, considering the amount of resources that is going into this, the government's intervening already without there actually having been any actual economic slowdown, and the government's already like in a position where they have to intervene. It's all politics at the end of the day, to maintain votes or whatever not. But this is super interesting stuff that that's been standing out to me personally. But cool, just want to kind of share some insight of some stuff that I'm seeing on the market, and it's interesting to me. Let me know what you think.